Thank you for our tuning into the Volker Report fourth installment, fourth edition here of our ongoing documentary, where we are discussing that there is no financial collapse because the financial collapse has already happened. Picking up where we left off in the prior video, we're talking about the 2008 financial crisis, the mortgage situation, and I wanted to point out just a few notes here. The first one being that during the time of that 2006 2007 time period, and really going back before then, I'll say from 2003 up until like 2007. Um, I had developed an algorithm that would time the bond market so that we knew for our clients when to lock in rates, interest rates. Um, During these time periods as well, I had worked with many other organizations and banks and stuff, and I remember passing this information around to one of the banks where I was working at, and I thought it was pretty. It was how do I say this? It was downright hilarious. Um, how people in the beginning didn't trust it, and then when I say, okay, you need to lock in your rates, and every day I forget the actual time period. I think it was between like 2 and 2:30. It was something about the actual time. I don't remember. It's so long ago, but I don't remember all the features. But I know that I could tell what time of the day to lock in, and there was a certain time, something about the afternoon, and I don't remember all the ins and outs and stuff about it. But at the time, it worked. It worked like clockwork. We knew when to let a rate float and when to lock it in, and it was awesome. And it actually helped us in pricing deals and stuff and closing deals, and other people used it and found it helpful as well. So that was one of my claim to fames as far as systems developed in the markets to do things. That was one of my most favorite ones. One of my earlier systems, though, was the soybean system, and that system was crazy. It pretty much never lost. It made you a cent and a quarter to a cent and a half a day, and that was pretty much without fail. And it was awesome, and I liked it. It was one of my earlier projects. And then there was that project actually spilled over into discovering a new mechanism, and this one was specifically in raiding cotton. I systematically and single-handedly used to raid the cotton market. How did I do that? There was a specific algorithm that I developed that would predict the next day's highs and lows exactly. And so what I would do is I would place my orders, my tickets would be in always before, the market opens. And I would routinely, on multiple occasions, with eyewitnesses, back when I was on that trading floor, the firm I was at, and I would buy the low of the day and sell the high of the day, and sometimes sell the high of the day and buy the low of the day. So if it was a shorting trade, I would be filled at the very high, and then get out at the low and take profit. I did this 3 times. I did it 3 times. After the third time, I was no longer able to do it because they caught wind of me and what I was doing, and they started egging me big time. They dissed me. They would hold my tickets and not fill my tickets like they were supposed to. They would wait, and they would do funny things with my order so that I would not no longer be able to do that. So I did a little bit of digging and research and found out what was what. And they said, well, our firm, the firm I was at, it was like, we have an account number, so they know when that account number comes over and they see, the tickets for the cotton futures, they know it's you. They know where it's coming from. So that's how you're getting egged. Another thing too that would happen routinely is that my the meat market, live cattle, feeder cattle, they were notorious back then for going home with tickets in their pockets, literally tickets in their pockets, tickets dangling out of their pockets, not you know closing out orders, letting it ride for a day or two. Sometimes, days will go by and you get a reprice on things you were already filled in. They reprice you. Sometimes it would even be in your favor. It was hilarious. Just the way business was able to be conducted. And during this time too, the crude oil market was the most gangster in the world. You're going to see that coming up here shortly. I digressed for a moment. I sidestepped from it because I want to. This is laying the foundation for what we're going to be talking about next. We're going to be talking about the systems, the systems, the old paradigm and the new paradigm, the systems that are in place. Basically, my point going forward is that machines have now replaced humans and have taken over everything, including the stock market. And it started here, 9/11. This is the chart, 9/11. This is the S&P 500, 9/11 chart. All right. When they closed the market on 9/11 and reopened it, what they did was they relocated the software. All right. They relocated it from the physical Wall Street to like New Jersey and other places around to keep the markets going. All right. And it was all done electronically. Okay. So this was like the perfect scenario to roll out the new electronic mechanism anyway. 9/11 gave it that perfect excuse to do so. So all the orders and stuff were all the trading was being done through New Jersey and other parts. It wasn't being done on Wall Street. Now during this time too, during this 9/11 period, you need to understand what was starting to take place anyway, right at the end of 2000. At the end of 2000, leading up to around, I want to say 2004, about 2004, 2005, somewhere around there. What happened was the new electronic system that they put in place started to phase out physical bodies. That's when you start seeing the layoffs and stuff come on Wall Street. They started laying off Wall Street. They start rolling up industries during this time. No industry went untouched. As a result of, I think it was, I'm going back here and I'm going back to the 80s now. I think it was that Pan Am flight. I forget which one it was. The Lockerbie, Scotland one of those. This is way back in the day. Right after that is where you had airline reform. Okay, that was the airlines 9/11 before 9/11. All right, that it caused that industry to be rolled up and totally redone and put under government control. Every time there is a major event, it gives the excuse to roll everything up under government scrutiny. There have been industries that had no government oversight, and regulation. Now it has government oversight and regulation, or another word for saying government control of that industry. The government has taken control of pretty much every industry known to man right now. The government is in control of it. They put into place back here during 9/11. This is where a lot of things happen and that you see now got its birth from 9/11, i.e. the Patriot Act. The Patriot Act replaced the U.S. Constitution. The Constitution got suspended. We haven't been operating under the U.S. Constitution since 9/11. We've been under the Patriot Act. Okay? The Department of Homeland Security also did not exist. It came after this. All right? Multiple government agencies got rolled up into the Department of Homeland Security. Even prior to that, when you started having the government shutdown scenarios in the late 1990s, a lot of department agencies that were existed back then, they got rid of also. And in the process of doing that, they instead of just like firing and laying off people, they offered, tens of thousands of people opportunities to take these incredible buyouts and to retire early. So they retired a lot of people, and then other people were able to get positions going somewhere else. So it was a smooth transition for a lot of people. So the late 90s, early 2000s was, I want to say, that the period, the decade of the roll up, where you started having small companies got eaten up by larger entities, and you started having industries starting to die out and go away, and new ones come in. And some took their place, and then others had nothing to take their place. So the airline industry got reformed, and now Wall Street was going to see its reformation also. So the stockbroker, as you know it, is a dead dinosaur, doesn't exist anymore. You got financial planners and other things like that, but no one's trading anymore. A lot of banks and Wall Street firms closed down their trading desks. A lot of things were happening during this period that you need to know. This is also the time where they started introducing the single stock futures. That's right, futures contracts on individual stocks. It never really gained ground and really took off, though. But yes, they did introduce futures contracts on individual stocks. It was also during this time right here that they tossed around an idea to create a futures contract for finding Osama bin Laden. I kid you not, it was real. They were talking about doing it. Then the Pentagon, Department of Defense got involved and said, you know what, on second thought, that's not a good idea. Let's not do that. Were they thinking about doing that? Because they know that traders are the most intelligent people on the planet. I don't mean because they have high IQs. I mean because they have access to information that the general public doesn't have access to. And they knew that if they put it out there and made a contract out of it, that people would find out a way and an edge in that market by finding Osama bin Laden and telling them where he's at. That's why it never took off. If you were really trying to find him and they really couldn't find him, that would have been a great way to go to find him, right? But they canceled it. Want to know why? Because they weren't interested in finding them. Everything you've been seeing and told has been for the public's benefit, and it's been a lie. We have not operated under the Constitution since 9/11. Hence, you've been seeing more lawlessness since then. You've been seeing all types of things, police violence and brutality against American citizens. I mean, the list goes on. This is not the purpose of the video. I'm just pointing out some things to you. In addition to that, you're seeing now the rise of technology in electronics. Okay, the market has been replaced with electronics. Trading floors are pretty much ghost towns. They're empty. Back in the heyday, you could have 1,000 people or more on a trading floor. You're lucky enough you got 20. Everyone now has gone off floor. Machines have taken over. Not long after this 9/11 period too, this is more so like in 2002, 2003, the New York Stock Exchange, the Chicago Mercantile Exchange, they started looking for experienced programmers, and they wanted them to work on some classified stuff because they were putting together the infrastructure for the new system. Now back here during these days too, we had curbs and circuit breakers in the market also to prevent the markets from getting out of whack. So this would slow things down a little bit. And I'm here to tell you that we haven't been using circuit breakers since back in here. As a matter of fact, the last documented time we used a circuit breaker was just prior to the 2008 crash. It was 2007, I believe it was. Let's move on. Next chart you're going to be looking at here. Let's see here. This is the, hold on, go back for a minute. I'm gonna fast forward because there's something I want you to see real quick while I'm thinking about it. Okay, this here is a chart of the crude oil futures market depth. I want to prove to you that computers have taken over the market. Okay, human beings are still in there, but the reason why you see microscopic volume like this is because, and drum roll please, there's no human beings in there playing it. Okay, one thing that I want to note here is the way that you can tell that the computer algorithms have taken over and human beings are involved. It's really simple. Here you see it's 37 on this side and 37 on the other side. Here you see even 24 on this side, 24 on that side. That's computer algorithms. That is the machines taking advantage and controlling the environment because there's no one else there. Okay? That's the only way that you'll be able to tell just by looking at it. But what I'm declaring to you today is the thing that keeps the markets going up and down is the machines. They've turned the financial markets into a living, breathing organism, an electronic organism. It's all machines and computer generated and driven. That's why you see huge crashes, rallies, whatever, on invisible volume, thin to no volume at all, and you can have huge moves, elongated candles, parabolic moves in the markets up and down. I don't have the chart. I wish I did. I couldn't find it. But there was one day, one holiday, when the Dow moved 1,200 points up on the day with no volume. It was a holiday. That is impossible and not supposed to be able to happen. All right, so then the next question you'll have is, okay, well then how are they doing it? Well, it's very simple. If you notice, correlations in markets were commonplace and non-correlations, meaning that if the Dow was going to be up today, then you would be long the Dow and Dow stocks, and you would be selling bonds, and the opposite. Then the opposite will hold true. If the Dow was down a couple hundred points, then bonds would be through the roof. Excuse me. Those correlations over the years have broken down because the machines have taken over. It's algorithms. There was a time too where they would use curbs in the market and circuit breakers. They don't use those anymore because they don't have any need for them. You don't need circuit breakers when the computer is controlling the order flows in the market and preventing crashes and things like that from happening. You can have pullbacks or significant moves, but you're not going to have the quote-unquote crash because it's being controlled by computers. That's why when you see the situation like the May 6, 2010 flash crash, the market was brought back immediately. It was immediately brought back up. How are they able to do that? Think about it like this. The dollar has become the Borg. The dollar has become hive mind. All right? You can't even get 20 senators in a room to agree on anything. Look at our Congress. Look at things. Look at Capitol Hill. They can't agree on anything, okay? Except for things that they're supposed to and need to agree on. Behind closed doors, of course. Same thing with the market. If, for whatever reason, people believe the Dow should be down for the day, the plunge protection team in the past will come in and prop the market up. You don't need to have a plunge protection team anymore because you have computers now. All the computers is a centralized nervous system that runs all of this. And the key to the controls of this is at the Federal Reserve. That's why no one's allowed to go into the Federal Reserve. No cameras are allowed in the Federal Reserve. It's a no man's land. So you're not allowed to go in there because they don't want you to see that everything is a big giant computer. Back in the mid to late 90s, a computer system over in Europe was created called the Beast. This thing was like a mile long. All right, and it can hold all the data for every human being plus some on the planet. This was back in the mid to late 90s. So this system is now in full place. That's why you have market manipulation like you see it. And it's really not manipulation, it's the computers, the algorithms resetting themselves and holding the markets together. All right. And so when we come back in our next video series, we're going to look further into this and see the computers at work and see how they balance themselves out and see how they've spilled over into not just Wall Street but the banking system and other systems. And you're about to see that in the next video. As time permits, I'm trying to get all the information I can together to really lay this out for you, but I'll just preface it to say this. You're going to see also how cash only still exists on a limited basis just for the public's benefit. They knew they could not reveal all this stuff to the masses at one time without creating a panic. But it's already here. We already have the one world currency. We already have all of that. The one world currency is not rubles, it's not francs, it's not the dollar, it's not gold, and it's not silver. It's an electronic database. It's an electronic mechanism. Everything is electronic. That's why they charge you a premium for converting electronic digits into paper currency. When you go to a bank and say, I would like to cash this check, there is a fee associated with doing so, especially if you don't have an account there at that bank. ATMs charge you a fee automatically for converting digital currencies on the screen into paper asset, into paper vouchers, if you will. That's all a dollar is. It's a receipt. It's a little voucher. It's a little coupon. So it costs money now to convert digits into paper currency. All right, and we're going to continue this in the next video. Thanks for tracking with me, and thank you for your patience, and we're going to keep it moving. I don't remember, it's so long ago, but I don't remember all the features. But I know that I could tell what time of the day to lock in, and there was a certain time, something about the afternoon, and I don't remember all the ins and outs and stuff about it. But at the time, it worked. It worked like clockwork. We knew when to let a rate float and when to lock it in, and it was awesome. And it actually helped us in pricing deals and stuff and closing deals, and other people used it and found it helpful as well. So that was one of my claim to fame as far as systems developed in the markets to do things, other organizations and banks and stuff. And I remember passing this around, this information around to one of the banks where I was working at, and I thought it was pretty. It was how do I say this? It was downright hilarious. How people in the beginning didn't trust it, and then when I said, okay, you need to lock in your rates, and every day I forget the actual time period. I think it was between like 2 and 2:30. It was something about the actual time. I don't during the time of that 2006 2007 time period, and really going back before that. I'll say from 2003 up until like 2007. I had developed an algorithm that would time the bond market so that we knew for our clients when to lock in rates, interest rates. During these time periods as well, I had worked with many other. That was one of my most favorite ones. One of my earlier systems, though, was the soybean system. And that system was crazy. It pretty much never lost. It made you a cent and a quarter to a cent and a half a day, and that was pretty much without fail. And it was awesome, and I liked it. It was one of my earlier projects. And then there was that project actually spilled over into discovering a new mechanism. Thank you for our tuning into the Volcker Report fourth installment, fourth edition here. of our ongoing documentary, where we are discussing that there is no financial collapse because the financial collapse has already happened. Picking up where we left off in the prior video, we're talking about the 2008 financial crisis, the mortgage situation, and I wanted to point out just a few notes here. The first one being that